Let's bring in Kevin Green, senior markets correspondent, to help set up some of the other action today. The big focus seems like it's going to be about the Fed, right? We get the decision on interest rates today. I know it's essentially no expectation of a change to direction, but what are the expectations as you see coming out of today?
Obviously, we're going to get an update from the summary of economic projections, and I think that's going to be the key and critical area for today when it comes to the Fed. We are going to see an adjustment when it comes to GDP expectations. I think the market is expecting that to be revised to the downside. And then also looking at the inflation component of their summary of economic projections. Do we actually see a move there? We have seen some promising data, but it has been a little bit sticky here. So I think that's going to be another little curveball here. And then we'll get the dot plot. Where do they see rates by the end of this year? The last report that they provided, they are looking for only 2 cuts for this year. Market's kind of pricing in 2.5 cuts, so it's either between 3 or 2. And so they kind of lean more towards 3 cuts. I'm not sure if the market's going to be really happy about that, or maybe they will. I think that's the big question mark. Is it a cut because of progress on inflation, or is it a cut because of concern about economic growth? And so we'll get some of that commentary from Chairman Powell here today. And I think the Q&A portion is going to provide some volatility. So I think we have a lot on the radar, and we'll see how this all actually pans out here. But looking forward to seeing this announcement.
One economist, this was a Goldman economist, who said that the Fed will, quote, have to rethink their projections now that the first tariffs have taken effect. And the White House looks set to eventually impose larger tariffs than initially seemed likely. So, that begs the question, because I feel like Powell's alluded to this before, couldn't take a position on it. But, we've heard, and we've also heard from economist after economist, that tariffs are expected to be inflationary. So do you think the focus is going to be more on what we have now in front of us versus what we'll potentially have in, I think it's about 2 weeks, maybe less than 2 weeks, with April 2nd in front of us?
Yeah, I think that's what makes it very hard and to be able to try to see what the Fed's going to do, because you are right. When you're looking at tariff policy, initially they will be inflationary. We probably are seeing some of that effect here with kind of the increase in imports in December and in January, and then also the increase in import prices that coincides with that. But over the long term, if they stay and they remain intact, Diane, it should actually be deflationary, because it should actually break down demand a little bit. And so that's where the Fed's going to have a little bit of an issue. And then also, we don't know if April 2nd, if those tariffs are actually going to go through. Those are the big ones. And if they are going to go through and they remain, then the Fed's going to have to adjust their policy. And that's where you kind of think about it and you say, okay, are they going to stay higher for longer because inflation's still elevated? You will have some inflationary pressures from tariffs. Or are they going to actually have a more of an accommodative policy because of the fear of an economic slowing event taking place in the United States? It makes it very difficult. I think the last time we've seen this type of dynamic, not as aggressive, but this type of dynamic was when we saw that, back in the late 70s, early 80s, right? And unfortunately, they cut rates too early, and that's when you saw hyperinflation. We also had some other geopolitical events around there. So I think that's one of their biggest fears, is that they accommodate too early here.
It does feel like such a tightrope, because you do see some cracks in terms of growth slowing, especially when you look at the consumer, but the job market is still holding up. At the same time, you still, have the tariff policy to keep in mind. I want to ask you, I want to just pivot a little bit and talk about really quickly some earnings that we have from today. General Mills released their quarterly results. Mixed bag, it looks like, beat on the bottom line. Take us through some of your takeaways.
Yeah, you're seeing the shares to the downside here. EPS did actually beat the street's expectations, coming in at $1, and the street was looking for 98 cents. But revenue did come up a little bit short here, coming in at $4.8 billion. Street was looking for $4.99 billion. But their guidance moving forward is actually readjusting, and unfortunately, it's not to the positive here. They are expecting organic sales to decline by 1.5% to 2%. That's down from the previous outlook of around a growth of 1%. And they're looking at the adjusted operating profits as well as adjusted EPS for fiscal year 2025 to decline between 7% to 8% in constant currency. Now, they are taking some steps in order to try to cut costs, and they do highlight that. And they do see some pressures when it comes to some of their competitors, especially when you're looking at private label or white label products here, which General Mills sells pretty much at a premium because of the brand. And unfortunately, when you're looking at their guidance, they did not adjust for any type of tariff policy. And they did make mention that if they do see tariffs coming into place and remaining sticky, it will have a meaningful impact when it comes to their earnings. So that's why we're seeing a drop to the downside here when it comes to General Mills.
So when you think about where they are, is it because people aren't eating enough Cheerios, or is it the price pressure here?
Yeah, it seems like it might be both, right? I think right now it's more, consumers are just trading down to more generic brands. And that's something that we do see in economic cycles. And that's been an issue for General Mills for a fairly long time here. So it's really kind of not surprising. I think the fact that they are not pricing in tariff impacts on their business, especially when you're looking at the grains that go into a lot of their products, that's something to just kind of be mindful of here. And I'm actually kind of surprised that they did not, forecast and adjust for tariff policy. But unfortunately, if we do see a slowdown when it comes to consumer spending, consumers tend to go from Cheerios to just off-brand O's, I guess,
Yeah, I'm sorry, KG. It's true with the no-name brands. And really quickly, I got to get on a serious note. I got to get your levels for today. We hit 56.14. Is 5,600 what you're looking for to the downside or lower? And what are you looking for to the upside on the S&P 500?
Yes. Just based on the flows right now, to the upside 5720, to the downside 5500. That's a really wide range, but that's obviously because of the Fed event here. Just know implied volatility, if you're looking at the money straddle, it's only pricing in about a 0.96% move to the upside or downside for the S&P 500, but the VIX is pricing in about a 1.3% move to the upside or downside. So all that means, Diane, is that premiums are actually relatively cheap going into this event. So be mindful of that. That's actually a pretty decent environment for traders.
All right, 57.20 to the upside, 5,500 wide range. Again, KG mentioned because of the Fed event. Thanks a ton, Kevin.